Hey guys, I just want to let you know I'll be starting in about 2 minutes. So just if you're listening in, just give me an extra minute or so. Hey guys, I'm just gonna I have to send out an alarm just because I think this happens every time change. Every time change, it screws up like all of our European traders. If you guys live in Europe, man, you guys are like, oh my God, I just missed the face webinar. It was an hour different than it usually is. So, sorry guys, I'm just I can't talk and type at the same time, so I just sent out a alarm just to make sure people knew. Like I said, it gets screwed up every year without a doubt. We do a time change, and for like 2 weeks, it screws up everybody in Europe. So or in Asia, it doesn't matter. It's just outside of the United States, everybody gets kind of screwed up with the time for like 2 weeks. So I just wanted to make sure I send out an alert notifying people. I mean, it's not going to catch everybody, and it's what happens. And again, I've seen this happen for so many years. It's like it'll be like about a week from now, like a week and a half from right now, everybody will be like, oh, okay, I'm getting the new time. And then it switches again, because Europe's. When do you guys switch your time zones in the rest of the world? Anybody else? When's your time change? Anybody? Do you know the date?
I only know for the US and Europe. I don't know anybody like Asia.
Yeah, I mean for Europe, when's your time change? I mean, you're in Europe.
2 weeks from now. 2 weeks from yesterday.
It is 2 weeks?
Yes.
Okay. So you
guys, from what I understand, it's not always 2 weeks. I remember 1 year it was only 1 week.
Yeah, and I remember 1 year is 3 weeks. So it's like Paul says it's in 2 weeks. Hamashu says it's in 2 weeks. Germany, 28th of March. So yeah, okay. Thank you guys. Yeah, and Portugal, Alexander said it's the 28th. So yeah, I guess it is for everybody else. It's the 28th. You know who did this to us?
Somebody US? Who I think I hate.
Yeah, George Bush.
Oh, was it? Okay.
Yeah, it was Bush. I'm 90% sure it was Bush. So that was, and you probably hate him.
Well, I hate him for that. I mean, why change time anyway? I understand the logic behind it, but it just screws everything up. Yeah, no,
it was Sun, Alexander. It was Sun. If you guys don't know, I met Bush Senior in person. Actually, let me see if I got I think I have a picture
Come on, your highlight is meeting Peter Schiff. Admit it.
I never. Hold on, really quick. Where's our Bush family photo? Oh, here it is. Yeah, this is before, obviously before he died, but this is just as my youngest was born, Roman. And that was what my wife literally gave pregnant, like, or she gave birth, like, what was that, 3 months earlier, because he was about 3 months old. But yeah, that's George Bush Sr. And, you know, I like the guy. The guy was actually very, very kind. And I got an opportunity to spend some time with him and talk to him for several minutes. And Ingmar, if your screen is black, you've got to log out and log back in. But anyway, his son, on the other hand, I wasn't a huge fan of. And that's saying a lot, because George Bush Sr. actually sent me to Africa, for crying out loud, to Somalia. And I still forgive the guy. Just kidding. I guarded him in Africa. Isn't that weird? Yeah, when I told him I met him before, he's like, "Where'd you meet me before?" And I said, "In Africa." And he's like, "Oh, you know," and I actually was in his guard detail. Anyway, all right, enough about that. Let's get into the markets, especially that, you know, equities are going to open in like 10 minutes. I want to point out that the dollar actually looks pretty firm here. And if you're looking at like the euro, you probably just got the update on ForexAnalytix here. We have a bear flag that's developing. Look at the Kiwi. Kiwi's got a bear flag developing. Aussie's trading a little heavier here. You know, you could actually argue that this is a bear flag as well, or, you know, it was a pennant or something. You know, like you could just, you know, say something like this. You know what I mean? You got some, you know, flags that are developing. Regardless, I just want to say the dollar looks kind of strong here, and that's the thing that I want to point out. I don't want to get too terribly excited about it at this moment, about the dollar firming, because you don't know why it's firming up, but because it's obviously not risk aversion at this moment, because stocks are higher. You can see the S&P is actually higher on the day, and the Dow's up 55 points right now. I mean, you know, the risk appetite is still very strong at this moment. But we do have the FOMC later this week, and that obviously is going to be a mover. And that's where we have to really start focusing on the dot plots, because, you know, if there's any indication that some of these Fed governors are starting to, you know, they're starting to think, hey, you know, everything's fine, everything's okay. And I'm in the attitude, and I got to say this, Stelios, and you can give me your opinion, and then we'll go into the charts really right after this. And this is something that I've been meaning to talk about. You know, I feel like this stimulus that we got is kind of unnecessary. I know that a lot of people lost their jobs, and I understand a lot of the service industry globally is really suffering, and here in the United States as well. But really, all the, and I hate to say this, and not sound like an arrogant ass or anything, but really all the good jobs, you know, are held. You know what I mean? For the most part, you know, like all the white collar jobs. So most of the people that have white collar jobs they haven't lost their job. It really is the, you know, it's the service sector that's suffered. I mean, because, you know, you lock down parts of the economy, and things are opening back up again. So I think this second stimulus package is really, it was unnecessary, and maybe even, you know, and I know, you know, you can blame it on the administration, but this was ongoing, you know, previous to this administration. What I do think this administration is very guilty of is not appropriating it correctly.
Yes.
You know, I think a lot of money should have been, you know, I think the thresholds for people who needed the money and who's getting the money and, you know, places where it's going probably is not the best, well, you know, pointed or allocated. But anyway, the reason why I'm saying this is because I think our economy is fine. You know, I think in the US, our economy is going to do fine. And I think the Fed governors are going to have to, you know, really, you know, they're going to have to really start to look and sound, or they're going to probably sound a little bit more positive moving forward. And therefore, you know, look to pull us out of this emergency situation that the Fed and, you know, monetary and fiscal situations in. So I don't know. I think that that there's a risk, and the reason why I point this out, there's a risk that we're going to start to see, you know, the dot plots adjust, and if they start to adjust, where you know the market starts to assume that the Fed is actually a little closer to considering raising rates than they were, the dollar's got a lot farther to go, and that's why I look at the dollar index right now, and you know I don't know if I'd be bearish here. You know, we've pulled back to a 38% retracement. If we start breaking, you know, 92 today, you know, that's where it starts to get a little bullish. So I'm going to write down 92 as being resistance. Support is the 38% retracement, and that's going to be pretty much support for the week, because as I told you guys on the week ahead video, if we break like either one of these, well, I would say 91.50, and really it's up here at 92.50. But intraday, you know, intraday we should be looking at this right here. Okay. You know, if we break 92.50, that's bullish. If we break back below 91.50 here, I guess it's 91.40. Let me adjust that. It's bearish. And by the end of the week, we will know which direction we're going, in my opinion. Right? Okay. Brock said allocated politically, not so much where actually needed. Correct, Brock. That's a great way to phrase it.
Blake, if I may add one thing, I have a friend in who lives in Fort Lauderdale, Florida, and his family income is one. Sorry.
Why?
Why? Yeah. Good question.
Just kidding.
His work is there, but anyway, they're making well over $100,000 per year. You know, they live a comfortable life, and he got nice stimulus checks, and he was like, "I don't need it, but I'm getting it." So, you know, this guy in particular, he's just saving the money, but he's not going in stocks or anything. But, you know, the way it's being distributed, to me, it looks a little bit weird. But I guess what they must have been thinking is, you know, what's another trillion? You know, we're adding, or what is it, 500 billion, whatever it is, the actual checks. You know, let's add that to the debt and keep going, you know, just in case. I'm guessing. But,
I don't know, Stelios. I really don't. And that's where you know, that's where this excess you know, risk has been taken in the markets, because the markets are like, yeah, no one needed it. And so the problem is if no one needed it, then where's it going to go?
Yeah. And I think we run
crypto and stocks and
exactly. And I think we run a risk when things open up properly. I think people are going to go out and spend. They're going to go out. They're going to go to restaurants. They're going to buy stuff, because a lot of people have been saving. Maybe not a lot, but you know, some people have been saving. So there is this risk that we're going to see a spending surge initially, at least.
Hold on really quick. Somebody keeps adjusting this, and I'm really going to right. No. Hold on. Somebody keeps adjusting these settings, and it's driving me crazy.
It's not me. It's probably Steve. Let's fire him.
It might be, and it's driving. There we go. That's it. I have to remove that because I can't see like half the numbers that we have on here when that's on there.
Yeah.
Anyway, somebody keeps adjusting that on our team. Anyway, 50% retracement in the euros, holding 618. I'm going to give us a little bit below that. It's going to be 118.93. So I'm going to write that down. 118.90 is support. Resistance is obviously, 120. It's 119.90, but I'll just write down a cool 120. And I think while we're below that, we have to be bearish. I'm just, for the euro specifically, the cable's a different story. I still think the cable's holding well above the 137.50 major support. But I also think the cable's at risk now. If the euro, moves lower, we're at risk of, challenging these levels. So support intraday, 138.60. And we are range bound in the sterling. So resistance is at 140.15 or 140.10, whatever we had written down last week. I think it's 140.10. And this is obviously key. Well, let's figure out what did we put down on Friday? 140.15. Okay, so I knew it was somewhere around there. Let's put 140.15. Okay, Aussie. So the Aussie's been trading heavy all day, and you notice this this blue, like this is the little support resistance level. You can see these hourly 4-hour spikes down here. So this is pretty important, and I'm going to write down 77. I'll write down 77.15. Because if we get below that, then, next thing you know, we're going to be at 76.20 again. So I'm going to write that down. And it's not very far away. Yeah, but you never know. You never know. Okay. Resistance intraday. And if you think about this is really looks like about a 50 pip range currently. Resistance right now, I'm going to write down at 78 cents. And I'm going to keep it in range. Kiwi. Kiwi's trading a little heavier, bear flag. So really the important support is going to be 71.50, then 71 cents. I don't think we're getting down there today, but I'm going to write it down anyway because it is trading a little heavier. Resistance is going to be 72.40. I'm going to keep this in range for now. So the dollar Canadian, we hit new lows today, but look at the now, if you remember Friday, like I said on Friday on this webinar, I said, man, that was some really strong data. Like everything was telling me, like if I didn't have a position, I'd be like, dude, you got to buy the Canadian today. And it was actually acting fairly decent on this webinar on Friday. And then, at the end of the day, it finally buckled. Probably as everybody realized that was really good data and that stocks weren't going to go down, then we got this sell-off in the dollar Canadian, finally. Now, what happened here is you can see we hit new lows. This isn't divergent. You have to keep that in mind. This is, if you look on a 4-hour chart, there's your low. Here's your low in relative strength, new low in relative strength, new low in price. So that's, that's actually bearish. I mean, that continues the bearish trend. That is just confirming that was a valid low. Now that doesn't mean that will be the low or won't be the low, but we are oversold now. We're working off that oversold. You got to also keep in mind that this might be viewed as a false breakdown. So I'm going to write down support today as being 124.40, resistance 125.20. And I'm going to have to put it as bearish. And I know we've been keeping it in range, but I'm going to have to put it in bearish for now because we're actually hitting, new lows. Wow, look at, again, Dow is up. Nasdaq's down. That divergence continues. Let's pull that up really quick. Let's Here's the Nasdaq, and let's compare that to the I mean, look at this, you know, the difference between what's happening with the Dow at new highs and the Nasdaq just diverging away. It's pretty big time. I mean, you know, there's definitely a shift, and it's a shift from, you know, out of growth into value. Well, perceived value anyway, with the Dow at all-time highs. But you know, it's something that is definitely an issue right now. An issue. I shouldn't say an issue. It's a theme. Okay. Now let's go over to the dollar Swiss. So here's the dollar Swiss holding up really well, holding up the 90. Let me do this really quick. Remove that because that's putting on the numbers on a different axis here. Okay. I need to minimize some of these a little bit. Just to give us a little bit more view. Okay. So what you'll notice in the dollar Swiss is we're, you know, flagging right now, and quite possibly bull flagging. So support has been 92 cents. Resistance, obviously key at 93.75, and I have to keep it as bullish right now. So dollar yen, very similar situation to the dollar Swiss, very bullish. Now the problem with the dollar yen, if you guys did not see this, is we are at key resistance, very, very key. This is a multi-year trend line. This is from 2015 to current prices. Okay. We just hit, you know, obviously new trend highs, divergent relative strength that stopped it, but that doesn't mean that that's it. That doesn't mean that we can't go higher from here. I mean, stocks are strong, and as long as yields continue to go up and stocks continue to go up, the dollar yen is going to continue to go up. I don't know what's going to win. I really don't know what's going to win out, if there is some risk aversion, you know, or excuse me, if it's like yields, like let's say yields continue to go up and stocks start to go down. I don't know if the dollar yen is going to go up or down as a result. I don't know if it's following yields closer or stocks closer. And I don't think we'll find out until we see that dynamic. You know, I can guess, but that doesn't mean anything. Possible double top here, you know, which is a risk, but I'm going to write down 90 or 109.30, whatever the high is, 109.36. I'm going to write that down. And I have to keep it in bullish for right now. The only thing that's going to take it off of bullish at this point is a break back below 108.30. So right now, support is 108.80. Okay. Working my way down. US dollar, Norwegian krona, it's actually holding up pretty well. So I'll write down 840 as support because you can see all these spike lows, but resistance is at 849. Then after that, it's going to be 854. Okay, so I'll write down 849. $854. That one's key, and support is at 840. I'll keep us range bound for now. Dollar MEX. Dollar MEX is trading pretty heavy. Nice little head and shoulder pattern developing. So that means that resistance is really at 21. And this is going to be very, very key for bears to hold. All right, here. 21, let's just call it 2105. Okay. Support 2055. So 2055, 2105. And I'm going to keep us in range for now. Unless we get above 2105, then it's going to turn insta bullish again. Wow, look at this Nasdaq. Nasdaq's heavy. Dow's just at highs. Simon says Boeing's up 20% in a week, dragging the dollar or dragging the Dow higher. I know, it's crazy, right? That's one thing that's driving the Dow higher. Dollar index, I think we already got it. S&P, let's write it down. So S&P, key resistance is at 39.60, right? That's the previous highs. This is in futures too. So that means support's right here at 39.10. And we have to stay bullish now. For now, probably until we get to 4,000, to be honest. Because that would take us right, you know, to the upper end of this, you know, megaphone pattern trend line. Probably the 127% extension is somewhere up there. Well, it's actually 40.34, but you know, if we break out, we got to start targeting up here. Let's go over to gold and silver. Gold, 1740 support, 1700. I'm going to keep it bearish while we're below 1760. I know a lot of you are like, well, look, we came out of a wedge and then we, you know, it's not trading well. Honestly, I don't think it's trading well at all. So, I mean, I know it's, you know, bounced a little bit, but I still, while we're below 1760, I think we got to stay bearish. Like, okay. So I'm just going to put us in bearish here. Silver. Wow. Nasdaq is just so heavy. Actually, the Nasdaq is turning. I think we got that early morning goose in the stock market in the Dow, and you got to watch this Nasdaq. If we start breaking in the lows, it might pull the rest of the market down here. I'm just keeping an eye on it with my other eye. Here's silver. So silver, same thing we've been dealing with basically is, you know, right now, 27, really $27 and $25. I have zero opinion about this silver at the moment. I know Stelios probably has all sorts of opinions. I just don't have any opinion. Bitcoin. Let's watch Bitcoin carefully today, because if Bitcoin breaks 52,000, let's just call it 52,500, there's going to be, it's probably going to come under some pressure. That's going to be a really important support. I think we got to, I don't want to be bullish. Well, I mean, we got to still be bullish, I guess, because we continue to make new highs. It's just, we get below here and this is going to get kind of ugly, I think. So I'm going to say it's bullish, but just mind 60,000. I think that any bounce back up to 60,000, you're going to get people that bought it higher that are like, okay, we're back at 60,000. I think I'm going to sell it here. You know what I mean? So you're probably going to see some selling as we approach that big figure again. Okay, so here's your bias chart. It's finished. There you go. If you want to take a screenshot of it, or Stelios is right now. He'll put it on the
I got it.
ForexAnalytix. Yeah, it'll be right here on the bias chart. It'll be uploaded here in a moment. So let me see if you guys have any questions really quick. It's been a slow day. I don't want to get too excited about things at this moment, but I need to talk about this really quick. Here's crude. Crude's rolling over a little bit, and take a look here. Let's yeah, crude looks like we might break back below this like 63, 64 bucks. You know, it's that might turn us a little. And you know, think about that if you have, you know, Canadian or Norwegian exposure too. That could turn the dollar Canadian higher, especially after that, you know, possible false breakdown. Just something to think about. Let's see. Georgie asked, would you have a look at oil? Oh, well, there I am. I'm looking at oil. Let's see. Just looking through your comments. We're all talking about time changes. Okay. It doesn't, you guys aren't asking for anything in particular. Alexander asked if we can look at nat gas really quick. Sure thing. Let's take a look. Lost my cursor there for a second. Woo, look at that. Whoa. Hold on a second. Hold on a second. I think we're probing some pretty key support here. Hold on a second. I hadn't looked at nat gas in a while. But so here we are, you know, this longer term triangle. Here's the daily chart, and we're at the 200-day moving average right now. So what I would say, and Alexander said, yeah, that's what I wanted to check. I would actually watch it very carefully today. I think a close below like 250. So we're at 252, right, or 254 right now. So maybe a close below 250 today. You're going to get a lot of people looking at that, you know, saying, you know, summer's coming, we're past winter, you know, it's going to be more supply, blah, 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 whatever it is. Yeah, I think a break of 250 might put, you know, this 225 back in, you know, play. And, you know, looking at this chart that you see right here, this is a daily chart. This is exactly how I see it right now. 618. You could argue that this is a 618 as well. You can just do that, right? Then we're probably looking at a move to a 78% retracement, something like this. Maybe back to 2. You know, I don't trade nat gas. I'm just looking at it. I'm looking at it from a, you know, is this correct, Stelios, an objective point of view? Yeah.
Sorry, say again?
I'm just taking, I don't have any position in nat gas. I don't have any, you know, I'm just trying to look at it, you know, objectively at this point. So.
Yeah, I think that trend line you have is pretty important, and it's also it coincides with the what is it, the
200-day moving average.
Yes, exactly.
Yeah, so I was just saying a break below 250, and
yes,
you know, it looks like, you know, we could get some downside here. So anyway, good view. But guys, it's kind of quiet today. Don't try not to get too overly committed. Just realize it's Monday. Usually risk comes in on Monday. Why? You get people buying over the weekend. You got, you know, you're going to get orders, people coming in wanting to buy ahead of the stimulus, you know, spend some of their stimulus money. They know they're getting a check in the mail or, you know, on direct deposit. So they're going to buy, you know, $1,000, $2,000 worth of stock, and you're going to get a lot of those orders coming in over the weekend. So don't get too excited about any type of risk off at the moment. There's a lot of macro events that are happening this week, especially with with the FOMC on Wednesday, excuse me. But what I would be really focused on right now, a couple of different things, just at this moment. Keep an eye on the Dow. The Dow's been leading this market higher. So I think the Dow, if we start seeing some, some selling come in, maybe break back below, some of these previous lows, that's going to maybe leak into other markets. And watch Bitcoin. I'm really serious about Bitcoin. If Bitcoin really starts to break below this this trend line here, like around the 52,200, 500 level, yeah, we're probably going to see some selling in cryptocurrency, which will translate into, selling risk, in my opinion. Crude oil is also pretty weak today, so keep an eye on that. But other than that, I'm really not. I'm trying to keep the powder dry as we have a very important week of trade. Stelios, is there anything you wanted to talk about?
No, I agree, and we seem to be on the precipice in quite a few instruments, and yield is one of them, and euro dollar creeping towards 120 again, which we all know is a level where the ECB start getting a little bit vocal. So we just unfortunately, in my view, nothing's changed yet, but we are, it could we could get something from the FOMC. Unfortunately, I think we have to wait.
Yeah,
I don't have any major ideas at the moment.
Great. Well, I know it's kind of it does feel like one of those days. Oh, also, one of the other things I want to bring up before I let you go, and watch and keep an eye on this dollar Canadian, just because that it's getting into that, oh crap, I did a false breakdown type of move. So see where I have an alarm set up right here. That's at 125.21, and what I'm going to do right now is you'll notice this, because I didn't adjust them this morning. I'm going to adjust this right now, 125.20, and I'm going to have to adjust a few things here. Let's see, 124.70. Just give me a second. I'll make further adjustments after I get a chance to look at everything. But what you're going to see is this dollar Canadian is going to shift. This is going to shift to 125.20 as your first resistance. And I shifted that specifically because, and you can see how that's changed, because I want you to be notified if it breaks 125.20. So if we break above this 125.20, I want you to be notified, because I think that's going to elicit a little bit of a short squeeze. Okay. All right, guys. Hey, have a great one. Stelios, thanks for being here, and enjoy your holiday there in Greece. And you guys have a wonderful day. I'll see you in the chat rooms. And if I don't see you in the chat rooms, I'll see you back here. The daily roundup, which is it's normally 10:30, so it's 9:30 my time. It's 2.5 hours from now. I guess 2.5 hours from now. I'll see you back here. All right. Thanks, everybody.
Thank you, Blake.
Thanks, guys.